Trading Academy live with Ambrose. Yes, today is the last trading day of the week. We're already entering the last trading week of the month of May. Sell in May and come back in October. We're seeing that market has been in a mixed trend in the month of May in the mature economy, and no African market is not left behind. Which also we have seen that in Nigeria market, NGS, we have seen that market has been in a downtrend since April. For us to speak now, I'll tell you that the global market are under the water. When I mean under the water, most of the market are struggling because they have all opened in the negative direction. That means they are opening what with fear. Why? Because of the odd against what the rate cut issue, especially as all eyes were especially on the rate cut to come as from the month of June. But from the statement from the officials of the Fed, this is not possible again. Until they see more macroeconomic data that point to that inflation is really cooling off. As they speak, they say inflation is sticking at this time. That means they've not seen the direction for that. They can't go ahead to cut rate, and especially for Fed. Don't forget that Fed is like one of the central banks that every other economy across the globe look to. For the good news that about 10 G10 or 10 European countries are already making moves to start rate cut in the month of June. That means by next month, ECB is there. We're seeing the Bank of Canada, Reserve Bank, many other in that region. The G10. For me, it's also a good sign that they are starting easing of rate, because most of this economy are also struggling because of high interest. You can see what is happening in Nigeria today. At the expense of the economy, the Central Bank of Nigeria have continued to hike rate in the name of checking the inflation. Not only that, the act they're also fueling inflation when there's high cost of borrowing, and we know that in Nigeria most of our issue today is not liquidity. They always refer to it, but I'll tell you that we're having cost push inflation in Nigeria with high cost of borrowing. We are also putting kind of pressure, also driving that inflationary pressure in Nigeria. I think it's the time for our own the central bank and the team tell the people to rethink. Yes, we have seen a hawkish move by Central Bank of Nigeria, but let's see what other across the globe is doing. I'll tell you now, by next month we are seeing about 10 G country, that means the European country, are about to start rate cut. It's a plus for them. Even England and all, Germany, all of them are putting plan, because you can look at the data that came from Germany for their first quarter, GDP. You see an improvement in that. Also, we're also looking at to see our own first quarter to give us an insight where we are as an economy for the last 3 months of year, which is about January, March, January, February, March. Let's see before we can now be talking of the last this is the second quarter we are. We really need to know where we are going. We need to know where we are going as a nation, because policy has put us where we are at this point. We are seeing that companies are closing shop. Some are leaving Nigeria to other. Insecurities all over. Cost of energy, cost of transportation, exchange challenges, and also the valuation of or depreciation of naira. All these are also playing on the economy, and looking at the interest rate to attract foreign investor alone, and also at the same time to control or to checkmate the inflation that we know is not really cash push inflation that we're having because of structural issue we're having in Nigeria. I think it's the time that the fiscal authority should come in here. Let's rethink our strategy. If businesses are closing down and unemployment rate is there, because as we speak now, job cuts have started already, downsizing has started already in many companies. That will fuel war insecurity. When people are not employed, they're about to do a lot of things. We need to rethink our strategy as economic managers down here in Nigeria to see how we can put the economy in the right path of recovery. Yes, we're seeing policies that are positive, but yes, implementation and others are kind of putting those positive policies not making an impact in the economy. Yeah, people say that 1 year is not enough to kind of give assertion or give a judgment. But I'm telling you that in 1 year, if we have this direction where we are going, we can start slowing down. We know when the stress was removed. We know what happened. Now we saw a little slowdown in inflation, which we know that it's not because of the rate hike we have seen almost 750 basic points in rate hike in just in 5 months that have contributed to this slowdown we saw in the month of April. We want to see May to see what May figure will look like. That is where we're saying that yes, whether police have made it or not. We have seen continuous rise even with before now with 600 basic points before the recent one on Tuesday. We need to understand where are we going. Are we going to just impress ourselves or to impress investors or to drive the economy that will oil, the whole economy that foreign investors will see that we're making forward, we're moving forward before they start coming, or just to use interest rate to come. They come and stay here, stay 6 months and go back, coming to give you money. That does not what we need. We need a policy that will drive the economy as we speak. Yeah, sorry, let's go back to the world economy as I was saying. If you look at Asia market or Asia stocks are really on the that trend, G3 of what or this rate suspension or rate extension, that the rate cut is not in view immediately, but it might be in the long term. These are the things that's also driving Asia market as we speak. But that's why, as an investor, you must understand this domain to know what is happening there that will help you to make what informed investment decisions, so that at the end of the day, your decision of what you are doing as investor also will guide you. Because as I speak now, China have extended losses as a result of what it saw market or kind of trading what happened on Wall Street yesterday in that environment. These are things that also we're going to see and going to continue this month. That's why I said, as we speak now, that weakness that was in Wall Street yesterday has also showed face in Asia market because of what? Because of inflation and high interest rate battle that is ongoing. These also have changed sentiment in the market. Stocks are looking southward in that. Also, like China, I've said that Chinese markets also have extended the loss as a result of decline on this trade war with the US, and also military drill near Taiwan. All these have kept investors on the edge in China. And that's why we are seeing the China market in that down direction. Yes, like they say, the best are always kept for the last. They say the best are always come for the last. How they put it? They put it that the best for the last. You see that as the earnings season is winding down in the mature economy, another big tech company, which I said last Wednesday, have released very impressive number. They will say that this is the best for the last. It's coming out to beat with all the earnings that are released in that sector in terms of IT. When we say IT, when I mean tech industry, this Nvidia result was something else that it has really impacted the price, the market. If not delivered, we have seen a huge loss in most of the market. But because of the result that came, that changed sentiment. But still, the weight of the sentiment against this US not going to rate cut has also changed. But that company has posted a very outstanding number that every investor will really want to know that this is a good number that want to look at, and also you will smile to the bank. Why? Because it has been there. The best was the best was saved for the last. That is what I mean by that. The meaning that this number is outstanding, and that tells you that numbers don't lie. And that's why you see when people are repositioning their portfolio to tech industry in mature economy, there's a reason, because the AI, which is the artificial intelligence, has really impacted on that, which Nvidia is standing out in terms of growth. This growth side or growth story of Nvidia is what has also changed the sentiment in the market. For me, it's not a bad one. We need to also keep this at the back of our mind as a trader, investor in any market you're trading that. When you see companies that are standing, that's the time you start to key in, because on the long run, price will feed on what? On earnings. It's very, very important. In Europe, also Europe market also looking sideward, as a lot of what the same rate issue, despite the positive GDP that were released in that market, still because of this fear. But I believe that when this rate cut for the G10 continues by start by or what we call easing of easing policy start by June, that will also be a plus for those markets in that environment. But to speak now, European stocks are still in the red. Majority of the stock because of what this US rate is it suspension of call it or extension or longer period before they can look there. These are the things that is shaping the market. If you also look at the US market itself, you can see that I'll tell you that as we speak now, the US the main indices, which is the Dow, S&P, and Nasdaq, I'll tell you they are also in red right now. Most of them are trading under the what I've said earlier. Compared to the previous day, despite the positive earnings, like I said, from the artificial intelligent darling Nvidia, but still the market is still in red. But on the average, I'll tell you that investors are still looking at this sector. The sector still have a lot of things for them, because they are seeing that better than expected earnings coming from that. But this is the first quarter result for Nvidia. They have seen that the revenue from the AI chip maker also outstanding. That's also an eye opener for them. Also, we explain that Second, in US also have approved the application for to list export neither ETFs. This also these are the things also that is happening in that market. Okay, like I said, Nvidia also caught US Nvidia has caught China AI chips price also. Because of the performance, the price of chips in China has also started looking at this trade war that was saying. As we speak now, crude oil is also heading for another weekly fall right away, because as we speak, the oil price is also at pullback again. In the market trading around 81.13 $81.13. I mean, 81 a dollar point 81 dollar point 13 cent. This is the position. Although despite that, they are looking at next week, which all eyes are on the next meeting of the OPEC. That is OPEC, which is an organization of the petroleum exporting countries that's that is slated to hold or as a scheduled to hold on the 1st of June. Here we will also see what will be the group. Are they extending their production? Are they cutting production? This are what, but I believe that there will be some extended voluntary output cut. Some will expect that, but let's see how it's going to also play out what in the commodity market. Don't forget that when there is a strong dollar, it affects, when there is weaker dollar. Also, this war that are going also in the Middle East, and that of Russia and Ukraine, and also it's not so helping market. It's not so helping matter. Sorry, and also at the same time, the fear of weak demand, global demand is also another thing. That's why we're seeing improved economic data from China to show that the economy is trying to find its feet. Also, US also, but because of high interest rate, that also will limit was spending. For that, they might see that we might see the oil price also looking southward again. These are the things that are keeping the market right now as we speak. But before we go into the market proper, we're going to look at the number that were released yesterday during the market, especially the number that came from FBN holding. Like I said earlier, that we know that there's this phrase that said that the best was saved for the best is always served, the best always served, or the best was saved for the last. Now, in this case of FBN holding, is it that the worst was saved for the last? I don't know how to put it, but if you look at the data that came from this holding company FBN, this is one of the oldest bank in Nigeria, but before they become a holding company, the numbers are not looking bad. If you look at the in terms of the top line and the bottom line, the balance sheet, they are all looking robust. But the payout is also another way of assessing the health of a company or in any bank. It's also showing that something is wrong, and it's also a pointer. If you look at the result, which we want to look at now, it is a company that are paid 50 kobo in 2020, 2022, and 2024, 2023, they are paying 40 kobo, a decline of 10 kobo. Fine, but also you can see that the rate of change in provision for non-performing loan to send a signal, and also to be a concern for investors in this company, because the provision of of the non-performing loan was huge compared to what we saw in 2022. And also, if you go back and look at also what is the capital adequacy of this bank, also going to give you a clue that the minimum is 15%, which as speaking now, if the bank is having about 16%, paying more of this might also have a way of also impacting that. That's why they still slow down to mean that they didn't go they below the regulation the regulators benchmark. I think that's why they are very kind of cautious in paying out dividend, because the huge non-performing loan, who they're going to see as we look at the number, going to tell us what to expect from the bank first quarter, and what we should do and what we should be doing. And at the same time, if there's a pullback, what is the next action for investors? Are you investing for dividend, or are you investing for capital appreciation? What's your position? Looking at your chart, when the time for you to jump in, you must understand all this. Let's go to the number proper. Yes, if you look at the gross earnings for the financial year ended 2023, December 2023 audited account for FBN holding. If you look at the gross earning for the group, you can see that the gross earning moved from 815.2 billion to 1.6 trillion naira, representing 95% in the green. For me, this is a huge number, good one, almost double, the performance, which is good. And also at the end of the day, you can see that the net interest also was a boom for them. They have a net interest about 548.9 billion for 2023. This is good. In addition to the net gain from derivatives about 680.62 billion again. All these have impacted positively on the bottom line. But the concern here is that if you look at the provision of 227.4 billion for bad loan, against against 68.62 in 2022. This is huge, and I'll tell you that there are some companies that this 224 some banks also among that this is also is their profit in the first quarter of for me, for the bank to make on this provision, something has gone wrong somewhere. Is that their risk management is wrong or it's not working? Because if as at 2022 they're having about 68 point they're making provision for 68 point, it's a plus. That signal that they are coming out from their world, from the huge non-performing loan that we have seen before. Then before now we have seen this bank making provision of 200 billion for non-performing loan, which we always say that if other banks do that, they will sink. But now this bank has stayed, and we have seen all this kind of provision. It doesn't mean that the management or the risk management of the company is not appropriately. What is covering the other first-tier banks or the focus are not posting such a huge also. Their bottom line is looking good, and also their payout is looking good. Why is this in this direction? Like I said, is it that the worst was served for the last or what? We need to understand why was saved. Sorry, was the worst saved for the last. But we expect that to see this result, everybody was kind of. But personally, I've told them that they won't pay anything more than 1 naira because of what I know where they are coming from. They pay that. Yes, but I see that it was even increasing, growing their dividend. They are paying. We need to understand all these things and how to use this number to make what decision. Like I said, that the gross earning moved from 815.2 billion against to 1.6 trillion, 95% in the green. This translates to what 310.4 billion against the 136.2 billion in 2022. That's about 128% in the green. Translate to an EPS of 8 naira 59 kobo against 3 naira 75 kobo. And the profit margin, yes, it grew, but from 16.7 to 19.4, which is good. But I'll still tell you that because there's a decline in dividend, I will tell you the market will treat this company. Yes, but we know that the movement of the stock has not been as a result of performance, but as a result of payout, as a result of what momentum investing as well, but because of what stake people in the major stakeholders increasing their stake, trying to compete to who will be the chairman or who will be this one who has the highest. And that's what I mean, not because of performance, but one thing that as an investor, when you see such or trader, such movement, take advantage of for wealth creation. That's why it must be where the billionaires are. The billionaires, they know how to work to move the share prices where they are, so that also they can impact what their position, their personality is what you want to look at when you're investing. This is the state of the result. But like I said earlier, for this provision is huge, and also for them to know to pay from this 8 naira 59 kobo earning per share, they're paying 40 kobo. Something is wrong, and that's why I alluded to what the capital adequacy at this time not performing loan that we see a good provision about 227.4 billion against 68.6 billion in 2022. This should send you a signal where the bank is going, but also all eyes are still on the first quarter. Despite that, this first quarter also is belated. We have seen that others Q1, so that less companies can put it together before they are Q2 for the Fugas or the first bank to know their position. But for others, we have seen where they are going already. That has given us a clue. That's why when I see the market correcting now, I feel that nobody should panic. Yes, it was we are taking profit earlier. You should be panic at this time. You should have known that this is the time for you also to buy into value and wait for no market remain in operation, and there are factors to drive the market down. And which we are seeing that one of the major factors that is the hawkish nature of the Central Bank of Nigeria, and that has attributed toward higher yield in the fixed income market, which we are seeing repositioning and also fund leaving the market for fixed income space. But if it will continue, there's also a time for rebound that we are going to see this market also rebounding. But as a pullback, it's an opportunity for you and I to buy into value that at the end of the day will also be smiling to the bank. Quick one look at what is the market data right away, being the last trading day of the week. But I think that the market has also pulled back below 98,000 mark, trading around 97,671.22. Market is in the red, down by 306.8 basic point, representing 0.34 at this point. For me, the market is still very, very red. I can see, look at the market internal is negative. We're having 14 losers against what 7 gainers as we speak. So if you look at the top losers this hour, look at the say that we're seeing the Conhol going down by now, or pull back by 9.4%. Also trading around the 125 kobo. We're seeing the FCMB at 625 kobo, down by 9.4%. Also international brewery also down by 8.5%. We're seeing also Arrow British School. ROT Briscoe also down by what? By 8.5. Now FBN head is also down by 8.8%, trading around at 2075. And this is a stock that our eyes are looking at where can it get to another strong support level that it touched last time, if that will also be another strong support level for the stock. For a quick one, look at the gainers. We're seeing that the gainers, we're seeing the Prestige Assurance leading, followed by Japo Gold, Sterling Bank, Unity Bank, and Fidelity. These are the top gainers right away. But in terms of activities, FBN Holding is leading the pack with 17.2 million share traded, followed by UBA's 15.6 million share traded, Access Corp 9.10 million share traded for Access, and Zenith Bank 7 million share traded so far, and FCMB 6.1 million share traded so far. This is the state of the market. Because of our time, let's look at the state of the market. Let's look at the chart, and also what will be the position of what, where will it jump in, looking at the chart of FBN Holding. Let's look at the chart for them. Look at the chart of FBN Holding to see where is the right time for you to buy or not. You have to know that you know exactly what to do. Are you waiting for the 40 kobo dividend, or you're waiting, since they are yet to announce their corporate action, then when is the right time to jump in, when is the right time to also to exit? Those that bought the stock at 40 naira, 44 naira, what are you doing? Are you waiting for this 40 kobo, or you're waiting for a rebound to that price before you can take action? These are the things that you should look at. But let's look at the chart. Also, we're seeing that chart is also doing a higher low here. You can see that higher low, we're seeing it here, that is coming down. You can see it here, looking down. But you can see for the last 3 days now, we're seeing that the market has been in red. This morning, you can see that I pulled back two before now. It's almost 3 days now. We're seeing the market down. You can see it here, but the volume traded so far have been relatively below what the traded average for the market. You can see the state of the market now. But let's really call our indicators to give us more information on what to do. We're looking at the Bolivar band now. So what we're going to use here, you can see that they said that the momentum in the market is weak. You can already see from the Bolivar band. That's why I said, let me call it up. And when you say that the market is relatively weak, even when trends are trying to return, but we're seeing that in this last 3 trading days, we're seeing that the market has also slowed down on its own. That is what we're looking at. Let's look at the money flow index, and at the same time we'll look at the MACD. Yes, I'm not calling up T-line because I've seen. I want to tell you that the market is weak. That's why I use this Bolivar band, so that you can see the state of the market. You can see that when market momentum was here, you can see the market value here, and I can see the market is that before it now expanded a little again. It's not, and then it expanded again, but now I can see the market also tightened the sign. But good thing that if you look at the money flow right now, money flow try to resist the uptrend, try to look up. Is it the volume that you put now? You can see why MACD remain marginally also bullish here. In terms of MACD, for money flow try to look up a little to read the 26. But for me, this low below 50 is not a thing that to gladden with or to rejoice with. That the market is weak. That's what we're telling you already. But if you look at 1 hour chart, the market is still going down. Money flow is already below what? Below 15 on the 1 hour chart, and the MACD is bearish on 1 hour chart. Then quick look at the 2 hours chart. That will give us more information. 2 hours chart also, the market is more fun. It's the market within a 23, and MACD is also either here or there. You can see that on 2 hours chart, you can see that the breakout band is also very tight at this point, waiting for a breakout. These are the things that we should have at the back of our mind whenever we're looking at chart. Not just to look at only the candlestick, look at the momentum in the market. It's very, very important. Yes, on 4 hours chart, you can see that money flow try to look up here, really 28. You can see that the market is trending also. That means range bound on the 4 hours chart, looking for what? A breakout. These are the things that you have at the back of our mind anytime you are trading. But finally, we want to look at the stock. We don't discuss their earnings now. Let's see how far the stocks, in terms of charts, where is the right time to buy the stock as we speak. Yes, you can see that when the stock touched as low around 19, around 18, I can see that there was a rebound. You can see when the stock suffer another pullback, you can see activities here. If you look at a pullback, within this high activities anticipated by the Bulgar Bank, I said it was wide here, came down here, touched trading within the lower Bulgar Band until it tested it here, that now form. You can see that this was what called an doji here, or a hammer here, before you now see what a rebound. See, also came here this out to trade. Now that means if you are trading, the target is right now that is fully back. But with this was in here almost at the lower Bulgar Band, you want to see what will be the right time for you to jump into this stock. It's very, very important. As we speak, money flow is looking down on 4-hour chart for this stock. Or look at 1-hour chart for FBN holding. You can see that here it's already below, outside the lower vertical line. Money flow, you can see, is down. You can see how that it dropped this morning, that people are really selling down the stock. If we started yesterday, you can see it here also. And the result that came, it's not for me, it's not palatable. Despite the numbers, the figures are not looking bad. For other, in financial ratio, there are many. The one that investors consider most is the dividend and also the earnings. Earnings looking bad, but continuity of work is also very, very important, because if you are declining in earnings, and it's a sector that we have seen a huge ball, because also another factor of not performing loan and also capital adequacy, like I said, these are what is restricted the bank for preparing good dividend, despite their 8 naira 59 kobo earning per share for 2024. These are eye opener for investors to know what to do when you look at this number, not just looking at the top line and the bottom line, but to look at other ratios to see where is this bank going to, or where this company is going to. On this note, I will say thank you. See you on morning. But tomorrow we're having a guest speaker, at the Q&A session. We're telling us how the impact of NPR on wealth creation and wealth preservation at this point. But see that market is reacting toward the outcome of that MPC that led toward adjustment of NPR from 24.75 toward almost 26, 26.25 as we speak now. This is what we'll be discussing tomorrow. We'll have an expert and they're going to teach us how can we take advantage, even in the capital market, whose sector will benefit from the hike, and all those stuff will be discussed in our meeting tomorrow. If you are not a member, it's an opportunity for you to also take action and subscribe and be a part of us tomorrow. And also for those that are member, prepare yourself to hear our guest speaker tomorrow, hopefully by God grace. On this note, I'll say thank you. See you on Monday by God grace. Bye.